You're entering CNBC TV 18's virus-free studio, powered by Century Laminates and Century Ply.
You're with us here on a fresh new edition of Trading Hour. The market is down about 40 points. We're at 11,932 as things stand. There was a bit of a surge which happened early on, but that's all but fizzled out. Banks which basically led that surge, the big ones, ICICI, Kotak, HDFC, all for a moment looked like they were basically breaking higher. I mean, they're holding gains or they're off the lows, but they're not going anywhere. 1/3% higher, basically, in the Nifty Bank as well. I mean, it's a slightly dull kind of a day, not very much in terms of stock-specific action. Infosys was the big beat yesterday, but I mean, the stock had run up quite a bit, and it's seeing a little bit of cool-off. My colleague Rima was just talking about that a little while earlier. But let's kick this hour off with, just looking at what's happening across the board. Rima, hi, morning.
Hi Prashant, morning. Yes, the rally in the markets has fizzled out a bit, at least in the first 2 hours of trade, and that's because IT stocks have come in for profit taking. Infosys is now down 7.5% from its early morning gains. It's in the red. And HCL Technologies lost about 5.5% from the top. So after this hectic run-up that we've seen in these IT names just in the last 3 months, these stocks have cooled off a bit. So if you pull up the contribution plate, you would see that a combination of Infosys and TCS is practically accounting for 100% of the Nifty weakness today. On the gaining side, you've got HDFC Limited, which is trying to fight for the index. But let's drill it down to individual stocks. Not much happening at the index level. We've got Sonia joining in, and she's going to tell us about Ashok Leyland. There have been some brokerage reports coming out on Ashok Leyland. They're sounding positive. Sonia's here with the details. Sonia?
Well, thanks for that. Ashok Leyland has risen 5% in trade today on the back of two positive brokerage reports that have come through. Nomura has a buy on the stock. They've raised their target price to 101 from 73 earlier. They say that the commercial vehicle cycle is expected to rebound sharply over FY22 to FY25, and Leyland will be a big beneficiary of that because of its high market share, especially in the higher tonnage trucks. The new light commercial vehicle range is also an added upside. However, they do caution that the near-term demand remains quite challenging, although the utilization levels are now improving. They expect a sharp rebound in freight rates over the next 6 months, which will be driven by new truck demand. Credit Suisse has also upgraded the stock to an outperform from a neutral. They've raised the target price on Ashok Leyland to 95 from 67 earlier. They also expect a 17 to 18% increase in the FY22 to FY23 EBITDA estimates, and they say that the roadblocks for the next commercial vehicle upcycle are now behind us. They find replacement cycle could be strongest for commercial vehicle players, and since Ashok Leyland has a high market share, they could be a big beneficiary. The optionality of a scrappage policy, though not the base case, does help tilt the risk reward in favorable of the stock. So all in all, positive brokerage reports coming in for Ashok Leyland. Back to you.
All right, Sonia, thanks very much for that. Stock's up about 2 1/3. It's off the highs, but looking good. Well, TCS came out earlier. I mean, the first of the IT results to report was a big beat. All stocks reacted. Then there was Wipro. Numbers were okay, but I mean, I guess the run-up took its toll. And today, Infosys is reacting in a similar fashion. Can Mindtree, when it reports, bring back interest from a market point of view at least? By the way, it's not just Mindtree. I think Cyient reports as well. Cyient is the big underperformer in the IT pack. But let's get key expectations from the one which is tracked very keenly, Mindtree. Rima.
Thanks. Yes, both Mindtree and Cyient will be reporting numbers, and both have clocked in a very diverse performance. Mindtree has rallied 85% so far this year. In fact, just a couple of days ago, it had doubled, while Cyient, on the other hand, has underperformed the Nifty IT by 50%. In fact, Cyient would be one of the worst performing IT stocks so far this year. But for Mindtree, the expectation is that this is going to be a recovery quarter. In fact, the company itself had guided for Q2 to be better than Q1. So what went wrong in Q1 is the fact that the company has a very high exposure to travel, hospitality, tourism. It used to account for 16% of their revenues. That segment saw a decline of over 50% in Q1. And as a result of that, the Q1 revenues fell very sharply to close to about 9%. So the expectation is that with the global economies unlocking, that segment will recover, while the other segments are seeing good demand, as we've seen in the case of other IT companies. So we're expecting a dollar revenue growth of about 4.5%. Margins will be stable around the 15.3% mark. The improvement in revenue, stable margins will drive about a 10% growth in the profitability. The key things to track, one will be whether the travel hospitality segment is recovering, the extent of recovery. Secondly, if the segments outside of that are firing, as we've seen in the case of the other IT companies. And thirdly, whether the top client, which, it's Microsoft for the company, though they don't officially tell us that, but we understand it's Microsoft. The company's been doing very well for Mindtree. Its revenues were up 10% even last quarter. Whether it's that demand is sustaining from Microsoft will be crucial to track. And then, of course, commentary on demand in terms of deal wins, etc., will be important from the future outlook point of view, Prashant.
All right, Rima, thanks very much. That's Mindtree. But Cyient, it's not tracked very much. I think it's some 50% underperformance relative to the rest of the IT index. What are we expecting? Some pickup?
Well, first, let me just tell our viewers why the stock has been such an underperformer. As you said, we don't often talk about Cyient. One of the key reasons is that it's not just the pandemic, which was a weak quarter for the company. It's been struggling. In fact, in the last 2 years, the dollar revenues for Cyient have fallen by 23%. So it's been weak. Secondly, it has exposure to the aerospace and defense sector. And aerospace was impacted by the pandemic. So particularly in Q1, the company had an additional hit. So that is point number 2. And thirdly, on account of the weakness in Q1 and the slow recovery expected in aerospace, the company had guided for a double-digit decline in revenues in FY21. Let's see whether the momentum in the other verticals is strong enough for the company to change that outlook, but this is what is currently guided by the company. Like we've seen with the rest of the IT pack, we're expecting growth to rebound. So dollar revenue growth is seen up by about 2%. This comes after a 12.5% drop in Q1. The management themselves had guided for a recovery. They'd said the outlook for Q2 is better. They expect growth to return in all industries except aerospace. Aerospace will continue to degrow even in Q2, though the expectation is the quantum of decline will be less. Q2 margins will be similar to that of the March quarter, and they reiterate that the margins in the second half of the year will be similar to that of last year. Let's see whether there is any change in the guidance, but watch for Cyient because it's been a big underperformer vis-a-vis the rest of the pack, and a positive surprise can change perhaps the trajectory of the stock. Prashant?
Thanks very much, Rima, for that. Well, let's just take a quick look at the index and we'll take our first break here. We're down 43, 11,928 or so is where things are at. So that's a lot of IT there. Mindtree and Cyient, of course, top of minds today as they report numbers. We will take a very quick break. We are back with what's buzzing in the commodity space. My colleague Manisha is going to talk about what's happening in the rubber space. Back with that on the other side.